How to buy municipal bond new issues on Fidelity step by step. That's what I'll be talking about in this video, because who likes paying taxes on bond interest earned, right? Hello members and super savers, I hope you're healthy and well. In today's video, I'll be walking you through in detail how I purchased our recent muni on Fidelity at a tax equivalent yield of 6.27% for at least the next 10 years, maybe even longer if Lady Luck is on my side. Fidelity does not charge you a fee for purchasing municipal bond new issues online. Now, if you're with Schwab and watching this video out of curiosity, drop a comment below if you're interested in a similar muni tutorial for Schwab. If you're with Vanguard, do note that Vanguard seems to only offer individual municipal bonds via the secondary market, not as new issues. And for those of you who are new to or need a refresher on municipal bonds, I've linked our Intro to Munis videos in the video description below. As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. First, I'll log into my Fidelity account. Here's my dashboard. I'll click on News and Research. From the pull-down menu, I'll select Fixed Income, Bonds, and CDs. And this is the Fixed Income, Bonds, and CDs page that appears. From here, I'll scroll down and check out these three rows here to see where secondary market yields currently are for the different credit ratings and maturities. This row here shows the secondary market yields for taxable municipal bonds. Good to know as a point of comparison, but it's not something that interests us personally given the high state and local tax rates in New York. Anyway, let's go back to the screen with the muni yields from before. I'll click on New Issues here. And this is the page that pops up next. I'll click on Municipal New Issues up here because I like seeing them organized by state. This brings me to this Municipal Bond New Issue Offerings page. As an aside, if you want to be notified of new issue muni offerings that are available on Fidelity in the future, you can sign up for fixed income alerts by clicking here. And if you want to learn more about municipal bonds in general, you can click on any of these other links here. This attributes legend gives more details on what each of these letters in the attributes column for each municipal bond stands for. If you're not familiar with any of these terms, these two Intro to Muni videos that I mentioned earlier are linked below and explains them in further detail. This one explains revenue municipal bonds versus general obligation municipal bonds. And this one explains municipal bonds that are taxable, tax exempt, and subject to AMT. I'll explain now the attributes that were not covered in those videos, specifically these 5 attributes here. In a competitive offering, the issuer takes bids at a certain time on a predetermined date, and the underwriter or underwriting syndicate that offers the best price wins. In a negotiated offering, the issuer selects an underwriter or underwriting syndicate who then helps the issuer in structuring and pricing the offering and coordinating the offering of the bonds to the public. Both a competitive offering and a negotiated offering are ways to determine the brokers or banks that will lead the issue of a municipal bond, meaning the winning bank or broker will ultimately sell the bonds on behalf of the municipality to retail investors like you and me. Now, there is a lot of discussion out there whether a negotiated sale or a competitive sale offers better conditions to the municipality that issues the bond. However, for us retail investors, there's not much we can influence here. We kind of just have to take whatever comes our way. Just be aware that in a negotiated offering, you know from the beginning which brokers and banks will be involved in the sale. For example, whether Fidelity is in or not. While in a competitive offering or bid, you don't know beforehand which firms will win. But in both cases, the final terms of the muni new issue will only be fixed and known once the negotiations have been concluded in a negotiated offering or the best bid has been awarded in a competitive offering. What happens behind the scenes is a bit different depending on whether the offering is negotiated or competitive, but that's beyond the scope of this video. The important thing to keep in mind here is that when you place an order with your broker for new issue municipal bond, it will in the first instance often not be immediately confirmed, but rather be treated as a bid that remains subject to confirmation and a potential repricing in the sales process, More on this later. Moving on. Blue sky states indicate that a municipal bond new issue offering may not be available for marketing and sale in certain states. More on this later as well. Insured refers to municipal bonds where the repayment of principal and interest is guaranteed by a third party or a party other than the issuer. The insurer guarantees the payment of principal and coupon interest in the event that the issuer fails to do so. And extraordinary redemption is a provision that allows a bond issuer the right to call its bond before maturity if certain specified events occur, as specified in the offering statement, such as natural disasters, canceled projects, and so on. I'll show you what the offering statement looks like later on. So let's go back to this original municipal bond new issue offering screen. I'm going to focus on this state column because I'm looking for a new issue municipal bond issued by my state, New York. And here is the one that I'm looking for. Now, if you hang out on this municipal bond new issue offerings page regularly, because, well, isn't that what normal people do for fun on a rainy day, right? Anyway, if you start exploring this page on a regular basis, you'll find that the muni new issue offerings change regularly, and that some days there may be no new issue offerings at all for your state. In any case, I knew about this one here for two reasons. One, a Diamond NestEgg member reached out about it, and two, I had received my fixed income alert email from Fidelity earlier that day telling me that this new issue offering would be available and that I had until 4 p.m. that same day to place my order if I was interested in participating in this muni new issue offering. Yes, that is how short the order period was in this case. This box shows the different terms that are available, with the earliest one maturing in 2027 and the latest one maturing in 2042. Here are the credit ratings from Moody's and from S&P. This shows the issue size, here's the settlement date, and here are the offering attributes. If I click on Sky, I can see the list of states where this muni new issue may not be purchased. Going back to this original screen now, remember that N shows that this is a negotiated offering. R shows that this is a revenue bond, and TE shows that this is a tax-exempt muni for New York residents. You'll notice that there's another muni new issue here from the same issuer, but this one has TAX in the attributes column, meaning that it is taxable, not tax-exempt like this one here. In other words, interest earned on this muni new issue is taxable on a federal, state, and local level. I can also see this from the FED TAX notation here. Remember, if you buy a municipal bond issued by your own state, what's often known as a tax-free in-state municipal bond, the interest earned on such a muni is generally, not always, but generally free of federal, state, and local tax. As a next step, I'll click on this preliminary official statement link here so that I can learn more about what I'm purchasing. And this is what appears on screen. It took me a good hour or two to go through this 316-page document. As I mentioned to our members in our Muni Deep Dive, I've been compiling and reading documents like this for over 2 decades. And the more you do something, the easier it gets. If you haven't done this before, it will take you longer. In the end, I decided it was worth putting $5,000 into this Muni new issue if I could find a yield maturity combination that was attractive enough. To see the yield maturity combinations that are available, I need to go back to this original screen first. The 16 here means that there's 16 different issues, bonds, available for this muni. Now I'll click on View Offerings to get more details on the 16. And this screen appears with the first 7 maturity dates. Let's scroll down now. This one here is the one I ended up choosing. Here's the coupon, the maturity date, the credit ratings, the purchase price per $100 face value, the tax-free yield, and the tax equivalent yield. Do note that this tax equivalent yield assumes that the investor, me in this case, is subject to the maximum federal tax rate of 37%. Always read the footnotes at the very bottom. As a point of reference, the 10-year Treasury note was trading nearly 2% less than this tax equivalent yield that same day. More later on why I chose the 10-year Treasury note as my point of comparison. So as I mentioned earlier, this box shows that I have until 4 p.m. on September 12th, 2023 to place this order. It was shortly after 2 p.m. when I took this screenshot. So you should know that the order window for muni new issues can be relatively tight in some instances. Here's the settlement date and the attributes here. We've gone through most of them. The only one we haven't is SFP, which stands for Sinking Fund Protection. A sinking fund in this context is money set aside by the issuer that allows them to repurchase, to redeem a portion of their existing bonds before maturity at a specified sinking fund price. While this may sound similar to the callability feature, there are specific nuances between the two which go beyond the scope of the step-by-step tutorial. What's important to know is that a sinking fund is typically set up by issuers, including municipalities, of a lower credit quality, as an assurance that they can actually pay their bondholders back over time and when the bond matures. And in some cases, having a sinking fund allows these lower credit quality issuers to offer a lower rate to investors than they otherwise could, as the sinking fund reduces the risk of non-repayment at maturity. So basically, from the industry perspective, good credit quality companies or municipalities don't usually need a sinking fund. And specifically, when it comes to munis, sinking fund protection means that the offered bond does not have a sinking fund as part of its structure. Going back to this muni that we ended up purchasing here, this means that it's not call protected, unlike all these other ones up here. I can click on the no to see the call schedule, but I'll show you another way to do this later on as well. The first call date on this muni is in 10 years though, meaning that assuming this New York muni issuer does not default, which is my assumption, then this should be my expected tax-free yield and this should be my expected tax equivalent yield for the next 10 years. And that's why I used the 10-year Treasury note as my point of comparison earlier in this video. Check out our latest member muni deep dive here to better understand why I chose the muni I did, the 5 most common tax and non-tax related muni traps, as well as some other super saving muni tips that may be helpful if you're just starting out on your municipal bond journey. Returning to this muni that we ended up purchasing, I'll click on participate and this trade screen will appear next. I'll click on view bond details to make sure I'm actually buying what I want to buy. And this screen will appear with more information. Once I've confirmed everything for accuracy, I'll double check the call schedule again by clicking here. And this box shows up confirming that the first call date is March 15th, 2033, and that it's continuously callable after this date. Going back to this trade screen, I'll enter 5 here, meaning that I'd like to buy $5,000 of this muni new issue because that's Fidelity's typical minimum purchase quantity for munis. Take note of this message that municipal bonds must be purchased in increments of 5. So if I did want to buy more than $5,000, the next smallest purchase quantity I could buy would be $10,000, then $15,000, and then $20,000, and so on. And note that most other leading brokers have similar thresholds, meaning munis can generally only be bought in lots of $5,000 or multiples thereof. I'm okay with the expected price and yield, so I'll click Preview Order. And this Alerts Enrollment Required screen appears, which basically tells me that to submit a new issue order, I must be enrolled in alerts for new issue offerings. These alerts allow Fidelity to communicate relevant pricing and yield information to me in a timely manner. I'll read through the rest of this and click Continue. And on the next screen, I'll confirm that this is the account that I want to set up this alert for, the account that I'm buying muni new issues in, and that this is the email address that I want to receive my muni new issue alerts at. Once I'm good to go, I'll click Complete Setup. Then I'll be taken back to this Alerts Enrollment Required page. I'll click Continue again, and here's the verification of new issue order screen that appears next. I'll reconfirm everything here for accuracy. Once I'm good to go, I'll click on Place Order, and here's my confirmation page. Now, keep in mind that while I've placed an order to buy this muni bond, I haven't yet actually acquired this muni new issue yet. As Fidelity confirms, what I've just done is indicated the maximum quantity of securities that I'm willing to purchase. By placing a new issue municipal order, I'm expressing the desire to participate in the new issue offering. For new issue municipal orders, unless the order is canceled by me, I will participate in the allocation process. Allocations may be made in whole, in part, or not at all. Updates regarding the order are sent to me as an alert that is sent by email or viewable in the service message center. Meaning that this confirmation screen simply confirms my interest in purchasing up to $5,000 of this muni new issue. But I haven't actually purchased anything yet. Depending on how the allocation process goes, I may get all of this amount, some of it, or none of it at all. And according to the friendly Fidelity representative that we spoke to, depending on the offering, allocations may be made on a first-come, first-served basis or on a largest to smallest quantity basis. In other words, I wasn't quite done with this muni new issue purchase at that point in time. And we're not quite done with this tutorial yet. The following day, I received this email from Fidelity. It basically tells me that the muni new issue that I expressed an interest in participating in has been repriced, resulting in lower yields for bonds maturing in these years, and how I can find the updated price and yield information in my Fidelity account. And if I scroll down, I can see that if I want to edit or cancel my order, this request must be completed within 1 hour of the time displayed at the top right of this email. So if I scroll back up to the top of this email alert, that means that I had until 2:02 p.m. to edit or cancel my order. Otherwise, it would go through. Which resulted in me throwing my late lunch sandwich to the side so that I could have all my fingers free to log back into my Fidelity account. So I went back to this municipal bond new issue offerings page that I was on the day before to place my order. And I scrolled down to this closed offering section to find the muni new issue that I had placed an order for, which is this one here. Now I'll click on View Repriced Offerings, which takes me to this screen listing all the bonds that are part of this muni new issue. I'll scroll down to the one that I'd placed an order for, which is this one here. And I can see that the price has gone up a little bit and that the expected yields have gone down by 2 to 3 basis points. It wasn't that terrible of a repricing in my mind, and still about 2% more than what the 10-year Treasury note was trading at that day. So I decided to go ahead with the order, which in this case meant that there was nothing left to do. Now, if I really was not happy with this repricing and no longer wanted to participate in this offering, I would have had to cancel it within 1 hour of receiving this email alert, which entails going back to my dashboard and clicking on Activity and Orders here. The muni new issue order I placed will not be found anywhere here in these transactions. Instead, I'll need to scroll down. And down here, I'll have to click on View Orders for new issue bonds, which will then take me to this page where I can hit Cancel here or Edit. As I mentioned earlier, we didn't cancel this order despite the repricing, so voila! We're getting a 3.95% tax-free yield for at least the next 10 years on this muni, or a tax equivalent yield of 6.27% in our case, which is pretty good in my mind considering the yields on other 10-year fixed income options out there at the moment. And if this muni gets called anytime after the first call date in 10 years, our resulting yield will be even higher. And yes, we are planning on holding this to either the call date or to maturity. Now, keep in mind that this is how I buy my new issue munis on Fidelity because I find this way relatively straightforward. But everyone's financial journey is different, as I always say. If you have another way of buying new issue munis on Fidelity that you prefer and that you'd like to share with our community, please do so via the comment section below. So, as you may have noticed by now, munis are quite a bit more complex than the Treasuries and agency bonds that we've covered so far. So if you're new to munis, I'd recommend again that you check out these intro to muni videos here first before diving into municipal bond investing. They should give you a good starting point to discuss with your tax and or financial advisor whether municipal bonds may be a good fit in your overall portfolio. All right, members and super savers, as always, I hope you enjoyed this video and learned something new. And if you did, I'd love to invite you to continue to support our channel through membership so that we can keep producing one-of-a-kind, sponsorship-free videos for our super saving community. Join our growing number of super saver members. Get your questions answered in our next live member Q&A on October 27th at 5:30 p.m. Eastern Time. And check out our latest member videos. To learn more about Diamond NestEgg membership, visit our channel page or the join link in the video description below. See you again very soon with more brand new wealth building content for your financial journey.